Hi, Kevin Blanch. I got to put this video up today because I'm so sick and tired. Hold on. If I hear one more moron go off about speculators and the oil price, I can't stand it anymore. I cannot stand the misinformation that is going on alternative media, mainstream media, lamestream media, right and left. It is pathetic. It is pathetic to me. Look, if I have to hear this one more time, the speculators are driving the price of oil up. It is a pathetic thesis and it is absolutely 100% false. It is false. It is untrue. Look, the United States has 311 million people. Yeah, has demand gone down here? Yes. There's 7 billion people on Earth. We have a rapid growing middle class in India and China. The global markets are not set by the United States. Is the United States a net exporter? Absolutely. First time in freaking how many years? Because of the offshore drilling. What do you think offshore drilling is all about? So they can park a tanker right there, get into the tanker, whatever, so they don't have to build a pipeline from Wyoming. Look, let's get real about speculators. How many hundreds of trillions of dollars a day trade in the oil markets? You think you're going to get a group of guys together and we're going to manipulate the oil price. As the legendary Clyde Cooley used to say in these classes, you think how many hundreds of trillions of dollars get it wrong? I hear it all the time. It is it's termed in books as the market fallacies. MBA students are taught and everybody says it is a fallacy. It is so untrue. You think you're going to get a group of investors and you're going to move them? Even if you did, say you exploited the oil market 50 cents, 80 cents, or $1. They're called arbitrage. That's what I did for years. I was a derivative arbitrage specialist. Okay, so you're an arbitrage guy. All right? What do? We find the inequities in pricing. Okay, say some speculators are moving something too higher versus demand, so it's a guaranteed way to make money. We go short one, long the other, and we bring it into proportion. It's called a carry trade when it comes to interest rates. That's exactly what Iceland fell in because they didn't play ball. That's exactly why the markets all had to follow, and Europe had to follow Greenspan. Because when the major currency sets an interest rate, you can't go it on your own. Iceland's proof of that. They tried it. Everybody mortgaged up their house, put it in an American bank, thinking they had free money. We seen what happened there. Look, it is untrue. What is the big elephant in the room that fuels the price of oil or gas? Olean at the station. Are they two different things? Very much so. Very much so. Okay, 2000, Bush stole the election. What was gasoline? $1.34 gallon. Seriously, how rich were we in the 90s? You had a market growing up while currency is getting stronger. What was oil? Well, right around there, $15 a barrel, as low as 10. Okay, what was the euro to the dollar? 75 cents. What was the yen? $1.30. We go on and on and on and on. Okay, what is the elephant in the room that fuels oil prices? And or gasoline prices, and or grain prices, and or housing prices, and or any price you could think of commodity. The strength of your currency. As I teach in my classes used to. Finance 101. Can a price of a commodity go down in one country and go up in the other at the exact same time? Yes. It's your currency. Okay, so we go from a euro. We'll use the euro because it baskets everything together. It's easy to use. But you can take the you can take them in. Probably be more dramatic. Okay. Okay, that's what we were. I remember going and listening to the EU. I say this over and over and over. Listen to the guy who's head of the euro speak in Manhattan. He says, someday we hope to have the euro equivalent to the dollar. That was in 1999. Little did he know that Bush would create a freaking couple wars. You know, we go freaking in debt, turn into the radical military industrialized complex, and it would go from that to that in a few short years in 04, 03, 05, 06. That's when this happened. That's when we fight. Has the dollar... Have we been getting weaker? Have we been getting weaker in the last 3, 4? No. We were here. We're here. We've hung in there about 34. That's where we've gone, but we're still nowhere close. So, okay, let's finance 101. Okay, so barrel of oils, if we set the dollar back to 75, we'll do this, just say it's $1.40, it's $1.32. We'll just do this. Well, okay, we'll do $1.30. To whatever we are today. Okay, class, get out your HP flux capacitors. What would that set pricing? Okay, what could that money you had in your pocket, the strength of that dollar in 2000, how much gas could it buy, how much house could it buy, how much, that's all that matters. That's when I hear everybody say, oh, the Dow's 13,000. Oh, really? Oh, really? Wait, remember we moved GM out. GM was the biggest component. Okay, so you bought the Dow. Okay, this is the trick they play. They pulled GM out of the Dow because they went to zero and replaced it. Did that help you with your money? No, I hear people all the time, I've got the Dow bought in a mutual fund. How come it's up X amount of gains and I'm not? That's why. Because the Dow with old GM that went to zero, you'd be about there. Okay, weighted against the dollar. Okay, we just went 132. So it's about 6,000. So you can do that with anything. Hello, you can do it with oil. Hello, hello. Okay, so we say the dollar, our currency, was as strong as we ever. We didn't run this debt. We had surplus in 2000. Remember? You know, listen to Justice Byers, what he says about this. You know, this isn't me saying this. This is not commentary. This is documentary. This is one of the justices saying the Supreme Court has no legitimacy. That's him. His picture coming out. That's not me. That's him. Okay? So do the math. Okay? What's oil? About 100 bucks a barrel? So that would set us back to about $56 a barrel. And if you rate it against the yen, it puts us about $46 a barrel. Sound about right? Yeah. Probably with the increase of global demand, sounds about right to me where it would be. There is your increase. Okay, let's talk gasoline. Let's talk gasoline. You're paying $4. Okay, let's go back to $2,000. That's all that counts, is the strength of these worthless things you have in your pocket. The strength of these things. Well, I don't, it's a broke iron, don't even in my pocket. Okay, let's set it back to the yen. Set it back to euro 11 years ago. Against the yen, puts about $2.20 a gallon. Again, excuse me, against the euro. Against the yen, puts it about $1.08 a gallon. There it is. That's what controls oil prices. I'm sick of it. And the reason we do deep shore, offshore oiling, so we can pollute and annihilate the Gulf, is really it doesn't make any Americans 1 cent. We hear all the time, increased demand, so we're not dependent. We're not dependent on foreign oil. We export more than we import. It makes oil companies money. Just like when we invaded Iraq, oh, we're going to get their oil. Are you an oil company? Oil companies control oil, not as, and speculators do not. I worked as a future trader for years and years. I love this bullshit fantasy island fairy tale you're on. You know, now, don't get me wrong. Are the derivatives markets, the derivative itself corrupt? No. Are the derivative market makers corrupt? Yes, 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 yes. There's where you make the mistake. Alternative trading makes the mistake. They make the mistake. They say, oh, the derivatives causes it. No, they didn't cause it. The market maker who runs the derivative caused it. Credit default swaps? Are they crooked and evil? For one reason. One reason. There's no regulatory committee that makes them pay. Okay, their insurance policy bought on it, just like the Greeks bought it on the bottom end, the Italians bought it on their bond as it was fed to them. Well, who's the one? IAG. So they're oh, sorry, we're not paying. There's the culprit. There's the culprit. I was a derivative trader for so many years. I went right to the SEC so many times with blatant stories, whistleblower. I went into the Palm 3Com thing and screamed my head off to the SEC. I went, as the same people who were on the board, Bartholomew and these guys, were on the same as the SunPower spin out. Went to the SEC, you could tell. Have a full blown out conversation, you know, it was like talking Chinese. These regulators have no clue what I'm even talking about. After 9/11, they get together. In fact, I interviewed with the government regulatory committees that wanted to put some forensic accounting. I was recommended by Dr. Cooley. We went in, and I remember the second round of the interview. They wanted to hire me because the 9/11 guys bought puts on the airline stocks, and they wanted to do forensic accounting, watch for improprieties and things, you know, were going on. Insider subcop trades were impropriety out of the money calls or out of the money puts, which is a great idea to watch it. I could tell that the interview, as I got into 10 minutes, the guy that I was interviewing, it was like talking Chinese. He had no clue. He was an SEC big dog. They don't even know that. They don't even know how derivatives work. They don't even, one of these market makers, fuck everybody. It's not the derivative, it's the market maker. So the guy, the lead guy, come in and have a talk with me in one of these classrooms right here. And he says, Kevin, we can't put one together because the SEC doesn't have enough departmental people that have enough expertise in the derivative to even really know what's going on to put one together. There it is. What do you think Madoff was able to pull the thing? Fuck, is it lack of regulation? Fuck yes. Oh yeah. Is it derivative itself? No. Futures contracts, options on stocks, the market makers are crooks. I see some of the most blatant crooked stuff pulled by a market maker. And then you go to the SEC, and they want to do something, but the SEC is totally unhappy because they don't even know what a fucking derivative is. And when it comes to oil, The mighty greenback has been crushed. When was it crushed? Since Obama became president? No, the damage was done. Since Bernanke became head of the Fed? No, the damage was done. Greenspan, as he lowered rates, as inflation at Finance 101. You raise rates when we have them. When was hyperinflation in this country? 2001, 2002, 2003, 2004, 2005. You could draw a line on the euro for the day we invaded Iraq. Woo! Hyperinflation. The dollar went from what? 90 cents to about 60. Oil went from $12 a barrel to 160. I'll tell you a great story right here in these classrooms. A lot of people, you Utahns, perk up on this. Jay Caw, who started Flying J, who I knew personally, he and my grandpa were real close friends, built up a magnificent, one of the fastest growing, strongest businesses in America, Flying J. Okay, they got some older guy, he used to think he was an adjunct professor here, who runs their derivative show. I used to teach the derivative classes in here, at the MBA level, till they turned into BYU North. Okay, Dr. Cooley died, he would roll over in his grave. A couple of these kids that were working over there in their upper, they fell for the Fox News radical stuff. When oil was spiking, went clear up to $160 a barrel, they panicked. They did not hedge. They did not hedge, which is 101 in the oil industry. When you're buying your surplus for the 2-3 months, whatever, you have to have the put on the downside to protect you, or vice versa. They panicked out. They bought 3 months of inventory. One of the biggest oil companies. This company was rich. They're filthy, stinking rich. Within a couple months, we know what oil did. Remember when oil went from 160 to 60? Just like that. They didn't have the bottom end, and they bought in. Oh, it's going to 200. It's going to 200. They hypered out and freaked out and psyched. They bankrupted the company. Bro, this guy took generations to build up. Decades and decades. They took it apart in a matter of a couple months. That's exactly why futures contracts exist. Are they important? Oh, yeah. Are the options contracts necessary in the derivatives market that came around? Hell no. I agree with that. I agree with that. I agree with Volcker. They did shit for us. Am I an option trader? Yeah. But did they help out any? Hell no. Credit default swaps? Hell no. Because as people built the credit default swap in AIG, it wasn't the credit default swap, it's the fact that they refused to pay. How can you be legally in the United States write an insurance policy, which they're being used for as an insurance policy by Greece, by Italy, by the banks, the crooked ass bankers, okay, and you wash out and you don't pay. Why don't they have to be, well, there we go. There you go. Lack of regulation. Oh, we're going to go in this business. We have enough money. Oh, you do? Why? Because we said so. But there's the culprit. There is the culprit on oil. The thrashing of the dollar. What thrashed the dollar? Well, it didn't get thrashed until 2001, 2, 3, mostly in 3, 4, 5, and 6. 2 bullshit wars. 2 total bullshit wars. The radical fake military-industrial complexes. We dump heavy money into it. And the number one culprit. Yan Rand, a radical nutcase himself, Greenspan. These ex-guys run the face. Is the Fed corrupt? It is now. It has been since the day Greenspan was appointed in '87 by Reagan. It's funny, from '79 till present, we've declined, we declined, we declined, we declined. It's no coincidence. Finance 101, Economics 101. Any students that ever come through any classroom. Inflation. How do you stop inflation? What is the Fed's role? One role. To prevent inflation. How do you stop inflation? Just like Volcker did. Raise the fucking rate. Volcker raised, everybody had a fit in the 80s, but that created prosperity in the 90s. Killed it. We had all the... That's it. What did Greenspan do when we started to get hyperinflation? And nobody paid attention because they had their eyes on those wars. There's the housing bubble, there's the commodity bubble, as it all bubbled. What didn't go up? Gold went from what? $245 to $1,800. Everybody was asleep at the wheel. Greenspan did this. Greenspan did this. Lack of regulation did this. It is not the speculator. You think you're going to manipulate the oil market? You're going to hundreds of trillions. You ain't. This ain't the Hunt brothers and the silver in 1980. Ain't happening. You couldn't manipulate it if you want. You couldn't manipulate it if you shell oil themselves. Too many traders out there. Too much money in it. Global demand. The dollar. Oil's got cheaper in Japan. Oil's got cheaper in Europe. Oil's got cheaper the last decade. Or gasoline, excuse me, both. Because their currencies, I hear all the time, oh, Europe's in trouble, Europe's in, oh, really? If Europe's so bad, then why is the euro to the dollar still $1.32? Why ain't it 50 cents? Kevin Blanch. Ignorance is bliss in this country.